Okay, we'll continue. And one request to all of you, like whenever I am taking the class, if you have any doubt, it will come. First lecture and all, it will not be there, but second, third class and all, you will get lot of doubts. You just mark those doubts and keep. So in the break time, as I am giving you this 15 minutes break and all, during the break time, you get your doubts clarified. So please don't raise your doubts during the lecture, because then that will waste the time, and because of that the batch gets extended. I don't want to do that for that reason, because it's a fast track batch. Now we have a time constraint for that reason. Okay, done. Even online students also, so just post your queries immediately after the break time. At frequent intervals I will clarify your doubts, and usually when the concept gets over only all those doubts gets clarified. Okay, in the mid and all, and you see like you will not able to understand anything. Fine. So continue with this input tax credit. See, this input tax credit and zero rated supply, these are the two concepts which you need to know in this segment 1, but others and all is not there. Just put a tick to this input tax credit and zero rated supplies. These are the only two areas which you need to read, and remaining and all not required. And in this input tax credit already we completed. So what is the meaning of input tax credit? GST paid on inward supply can be availed as ITC and utilized for payment of GST on outward supply. Availment of credit means what? Taking credit, that is through 3B. Utilization of credit means adjustment or set off. Even IGST paid on import also can be availed as ITC. Just before I made a discussion with you, whenever we import the goods, what is the type of duties that we will pay? Customs duty we will pay, and GST also we pay. What GST? IGST. So we pay IGST, integrated goods and services tax, and that can be taken as credit. Even one more thing is also there, that is called a social welfare surcharge. On import, basically we pay three things here. On import of goods, I have already given there. On import of goods we pay basic customs duty, social welfare surcharge, and IGST. So what is this basic customs duty? Basic customs duty is customs duty payable on every product that is imported, and social welfare surcharge is like your health and education cess you have now, this income tax, like that an extra cess which is being levied. And IGST is to offset CVD and SAD previously which you used to pay. So now we are not paying. So this basic customs duty cannot be taken as input tax credit. Even social welfare surcharge also cannot be taken as input tax credit, but this IGST we can take as input tax credit. Okay, so that is the point which I have given there. Basic customs duty and social welfare surcharge paid cannot be availed as ITC, but IGST paid on import can be taken as ITC. Then see the next one. This is a general principle. When my outward supply is taxable, I can take input tax credit on my inward supply. But when my outward supply is exempted, I cannot take credit on my inward supply. What does it mean? Say I am selling two products, product X and product Y. Product X is taxable, whereas product Y is exempted. Product X related material what I am purchasing, I can take ITC. Why? Because product X is taxable. So whatever material that I buy for using in product X, I can take ITC, but product Y is exempted. So whatever material that I purchase for use in product Y, I cannot take input tax credit. Is it clear? And this one-to-one correlation we don't have to bother in input tax credit. Whatever material I purchased, is it present in the final product or not, I don't have to check. If it is used in the course or furtherance of business, that is sufficient. For example, in costing you would have studied direct material, indirect material, like that. Direct material is something which is present in the finished product. Indirect material is used, but it may not be present in the finished product, like consumables, etc., which gets exhausted in the process. For example, to run a machinery, we buy some fuel, and to wash the machinery, we buy this cotton waste, etc. and all, these will not be present in the final product, correct? But even then we can take ITC with respect to that, because it is used in the course or furtherance of business. But the moment when you see exempted, go backwards and see what are all the inward supplies present in that exempted product. If outward supply is taxable, don't bother about outward supply. Whatever purchases you have made, is it used in the course or furtherance of business? Yes, take ITC. Otherwise, don't take ITC. Simple. But when the product is exempted, now start analyzing. For this exempted product, what are all the inward supplies I have used? Those inward supply used for the exempted product, I cannot take ITC. Is it clear? Then, what if I have inward supply which is commonly used for both taxable and exempted? I can take proportionate ITC, I cannot take full ITC. Okay. Then, what if the outward supply is zero rated? What is the meaning of zero rated supplies? Don't literally interpret. Not the rate is zero, that is not zero rated. So it appears that zero rated means rate is zero is known as zero rated. Wrong, that is not zero rated. The burden of GST becomes zero, that is called as zero rated. When the burden of GST becomes zero, in two cases the burden of GST becomes zero. Concentrate. Export of goods or services, supply of goods or services to special economic zone. I am exporting some goods or services, or I am supplying goods or services to a SEZ, special economic zone. Now, I have two options. You please have a look into it in the zero rated supplies. The next discussion is that only, zero rated supplies, immediately below this input tax credit. What are the two things which are considered as zero rated supplies? Export of goods or services, supply of goods or services to SEZ. And I have two options. Option number one, I will pay IGST. And on export or supply to SEZ, on outward supply I will pay IGST. And whatever IGST that I pay, fully I will not pay out of my pocket. I already have some input tax credit. Using that input tax credit, I will pay. Now I will get the refund. So refund of what? Gross GST. For example, the gross GST is 8 lakhs. I have input tax credit 5 lakhs. How I have input tax credit 5 lakhs? To make this, I would have purchased something na. So 5 lakhs credit. And 8 lakhs is my liability. So 8 minus 5, I will pay 3 lakhs. But how much I will get as refund? 3 lakhs or 8 lakhs? 8 lakhs. See there, gross IGST I will get as refund. Gross IGST, that is 8 lakhs I will get as refund. What is the logic behind this 8 lakhs? Very simple. At the time of purchase, how much I paid? 5 lakhs. That also I am getting as refund. At the time of sales, how much I am going to pay? 3 lakhs. That also I am getting as refund, which means my tax burden is. So it is called as zero rated. Is it clear or not? As the tax burden becomes zero, it is called as zero rated supplies. Okay, option 1. What will happen in option 1? On outward supply, I need to pay IGST. And on inward supplies, I can take input tax credit and adjust against my liability. And how much refund I will get? Gross IGST I will get as refund. Whereas option 2, you see. Option 2, don't pay any IGST on export of goods or services or supply of goods or service to SEZ. Means export without payment of IGST, or supply to SEZ without payment of IGST but under a bond or letter of undertaking. I need to execute a bond or I need to execute a letter of undertaking. That is just like promise on you that I will pay if in case I defaulted, like that. Just a promise is letter of undertaking. Bond is like executing a bond with the government. Now, I will not pay any GST, but on purchases I will have some ITC. That I will get as refund. Fully, yeah? No, only on inputs and input services. Can you see that word? ITC availed on inputs and input services. So the inward supplies of a person is classified into 3: inputs, input services and capital goods. Inputs means what? Any goods purchased and charged to P&L is known as inputs. Any goods purchased and capitalized is known as capital goods. Any goods purchased which is capitalized is called as capital goods. Any goods which is purchased and not capitalized means charged to P&L is known as inputs. So now they are not telling which should be capitalized, which should be charged to P&L. GST law is silent. Now you go by your accounts. So the accounting policies and the accounting estimates only will prevail here. So GST law is silent. So unless it is given as capitalized, it will not become a capital good. So it will become inputs only. You got it? Capital goods means those which are capitalized in the books of the person who is purchasing it. When he will capitalize as per accounts. So you have learned now. So we have different standards and the Ind AS which says that when you need to capitalize it, you take this borrowing cost concept. In that they will say till the asset is ready to use, all expenses you need to capitalize to that asset. Correct? Which means you buy some spare parts for that asset, even though those spare parts may be useful for 1 year, less than 1 year, but it is purchased for the purpose of putting that asset to use, ready to use, means you will capitalize there. Means even though in nature it is raw material, nature it is inputs, but as you have capitalized that in the books, so it will be treated as capital goods for GST purpose. Are you understanding this? Then next, why we need to know about the difference between inputs and capital goods? Input service, no problem, any service which is received is input service. Why? Because see there, we will not get the refund on capital goods, we will get the refund of only inputs and input services, not on capital goods. Understood or not? When? Which option? Second option. Now you tell me which option is preferable, option 1 or option 2? Option 1 or option 2? Option? I will choose option 1. You know why? I will get even the capital goods credit as refund. How? I have a liability. I can use capital goods ka credit also for payment of liability. Now I will get full amount as refund. Means capital goods credit also I am getting as refund. So what, sir? Previously it was as input tax credit, now you are getting refund. Boss, if it is input tax credit, I can use it only for payment of liability, tax liability, that to GST liability. But if I have cash, I can do anything. I can use it for purchase of my raw material, I can use it for payment of salaries, or I can use it for my personal drawings. Correct? Anything I can do if it is in the form of a refund, because refund will be given to my bank account. They will not give refund to the ledger, they will give refund to my bank account. So I can do anything with respect to that. So I will definitely go for it. So if I have credit on capital goods, I need to go for option 1. Suppose if I don't have credit on capital goods, I will go for option 2. Why? On outward supply, no need to pay anything. Cash outflow is eliminated. Time value of money, because I have to pay, wait for the refund. This time value of money is involved. So I will definitely go for option 2, because no need to pay anything. Whatever already paid, I will get it as a refund. When? If I don't have credit on capital goods. If I have credit on capital goods, I will definitely go for option 1. That's why we have 2 options which are given here. Sir, can I follow these 2 options for the same month? Yes. Consignment wise I can decide. Shipment wise, transaction wise I can decide between option 1 and option 2. It's not like option 1 is opted in the beginning of the financial year will be applicable throughout the financial year. We don't have that. Shipment wise, invoice wise, I can decide between option 1 and option 2, which means in the same month I will have few shipments covered under option 1, few shipments covered under option 2, few invoice under option 1, few invoice under option 2. Is it clear or not? Now let's try to understand this with the help of some illustration. But before that, when my outward supply is 0 rated, can I enjoy the ITC on my inward supplies? Yes. There is no restriction. That's what in both the options we saw. Whether you pay GST or don't pay GST, you can enjoy the ITC. Now in this one twist is there, see. Concentrate. Sir, this pen is exempted, sir. This pen is exempted. If I sell in India, this pen will be exempted. To make this pen, I purchase some raw material. Can I take ITC on the raw material? Why? Because this pen is exempted, I cannot take ITC on the raw material used for making this pen. Correct? This pen is now exported. This pen is now exported. So it will become 0 rated. it will become 0 rated. Now for making this pen, I purchase raw material. Can I take ITC? Understood. So it is a exempted product or a exempted service. Generally, we cannot take input tax credit on the inward supply used in this exempted product or service. However, the moment this exempted product or service gets exported or supplied to SEZ, it will become 0 rated. The moment its character changes to 0 rated, whatever inward supplies that I have, on those inward supply used in this, I can enjoy the ITC. Are you getting this? Understood? So you just write down somewhere over there if you have the space. If exempted product, in the next page you have some space, there you write down. If exempted product or service is exported, if exempted product or service is exported, if exempted product or service is exported or supplied to SEZ comma, it becomes what? 0 rated, and consequently ITC can be availed on inward supplies used for such exempted product or service. Got the clarity? Generally, if a product is exempted or if a service is exempted, we cannot take input tax credit on inward supply used in that exempted product or service. However, if that exempted product or service is exported or supplied to SEZ, it becomes 0 rated. When it becomes 0 rated, we can take the ITC on the inward supply used for that. This simple point many times is tested in exam, and we will do this as wrong in exam. Be careful. So generally exempted means we cannot take, but here what happens, it is exported, means we can enjoy the ITC, and even we will get the refund of that also, correct, provided it is option 1 or option 2, depending upon the option we will get. And this option 1, option 2 decided with respect to each invoice, decided with respect to each invoice. We can choose either we need to follow option 1 or option 2, we can choose with respect to each invoice. In option 2 also the burden will become 0. Yes, on outward I am not paying anything, on inward whatever I pay, that I am getting as refund of ITC. So which means here also the burden becomes 0. That's why it is called as 0 rated, but 0 rated does not mean rate of GST is 0. Rate of GST is 0 is what you know? Nil rated. Rate of GST 0 is known as nil rated supplies. Nil rated supplies will come under the category of exempted supplies. Now look into this illustration 2. But this concept of 0 rated is important. In this chapter, first chapter, actually this will come in refunds chapter, but I gave it in the beginning itself. Okay. So in your ICS study material, this will come in refunds under GST, but I gave it here itself. Okay. So illustration 2, this kind of illustration you can expect for exam related to computation of refund. Okay. Say this. ABC Private Limited is an exporter who is exporting some finished goods. The value of that finished goods exported is 8 lakhs excluding GST at 12%. And this exporter made 3 purchases: inputs, input services and capital goods. Inputs value is 1 lakh excluding GST at 12%, and input service is 50,000 excluding GST 18%, and capital goods excluding GST at 12%. These 3 things are purchased, and used in export. Now, what is the refund under option 1 and option 2? Okay. So, now for the time being you just close your book and look into the screen. We will do the calculation. Take your notebook. Answer I gave, but we will do once just to know as to how to arrive at the answer. What is option 1? What is option 1? Pay IGST and get refund of that IGST. Write that. Option 1. Option 1. Option 1 hyphen export upon payment of IGST, export upon payment of IGST and refund of such IGST. Export upon payment of IGST and refund of such IGST. This is option 1. Now, what is the gross liability? See the question. What is the gross liability? How much is the outward supply? How much is the outward supply of the exporter? 8 lakhs. On that 8 lakhs, what is the rate of GST? Gross liability means output tax, tax on outward supply. Okay. So, what is the outward supply? 8 lakhs. 8 lakhs into 12%. 8 lakhs into 12% is what? 96,000. So, write down gross liability in brackets 8 lakhs into 12%. Remember, in exam, always you should show the workings as forming part of answer. So, that will be clearly given in the question paper itself. All workings should form part of answer. You know what does it mean? Whatever you do in your calculator, that you should write in the answer sheet. This 8 lakhs into 12% you do in calculator and you will write 96,000. But how that 96,000 you got, you need to write. Okay. All workings should form part of answer. Because of that also you will lose the marks. So, in brackets write down 8 lakhs into 12% equals to 96,000 minus input tax credit. Minus input tax credit. What is the input tax credit that you have? First inputs. Inputs how much? 1 lakh into 12%. How much? 12,000. So, input tax credit underline and write down below inputs. Inputs in brackets 1 lakh into 12%, 12,000. In the outer column 12,000 or inner column anywhere you can write. Then next input services how much? 50,000 into 18%, that is 9,000. Capital goods credit also we can adjust. Yes, capital goods credit also we can adjust. Capital goods 1,50,000 into 12%. 1,50,000 into 12%, that is 18,000. Now 12,000 plus 9,000 plus 18,000, 39,000. 39,000 you adjust from 96,000. Now you will get one number balance. How much? 57,000. What is the name of that 57,000? Net liability or net GST payable. Net liability or net GST payable. That is not refund. That is a net GST liability. Now, how much is the refund that you will get? How much? 96,000 gross. You know what is the logic behind that 96,000? Simple. On sales, outward supply, how much you are paying? 57. On purchase, you paid 39. 39 plus 57, that only you will get, but they are telling gross IGST. Logic is this. But directly they are not telling whatever is your gross IGST, we will process the refund, because this refund is processed by customs department. This refund is not processed by GST department. How GST department will know whether you have exported or not? Boss, whenever you are exporting, where you need to take the goods to? Customs. And in the customs port or airport or land customs station, you will be exporting. So, customs officer, based on the shipping bill that you file, will process this refund. So, here we should not make any refund application under GST. This refund will be sanctioned by Customs Department. Write down below, refund sanctioned by Customs Department. How much? 96,000. So this refund who will sanction pa? By Customs Department. This is which option? Now option 2. Understood option 1 everyone? Then option 2. What is option 2? Without payment of IGST. Export without payment of IGST. Under bond or LUT. That is important. Without bond or LUT, if you export without payment of IGST, that is not considered. So therefore you will end up paying the GST. So therefore you should ensure that you are executing a bond or you are getting a LUT. Under the bond or LUT only you can make the export. What is the full form of LUT? Letter of undertaking. Bond normal. In a stamp paper you will execute. And for every bond and LUT there will be one number that will be given. So that number you need to quote. Okay. So at the time when you are claiming the refund. So export without payment of GST under bond or LUT and refund of what? ITC. And refund of ITC. Underline that. Now, what is your gross liability? 0. Why 0? Without payment of GST. So gross liability 0. Gross liability 0. Next line. Refund of ITC with respect to what? All three are inputs and input services. Refund of ITC with respect to inputs and input services. Sir, why are they not giving refund of ITC with respect to capital goods? Because they want you to go for option 1. What is the advantage government gets when you go for option 1? Cash inflow. You understood? Cash inflow pa? 57,000 rupees cash inflow they will get. And when they need to give you refund? Whenever you are exporting. And thereafter you make application. And thereafter 60 days. This much time your money is with them. You got it? They can use it for many developmental activities and they will give you the refund. So it is good only. You understood? So that's why they force you to go for option 1. So how to create a force there? By giving option 2, you will not get some benefit. So you will go for option 1. You understood or not? Then refund of ITC with respect to inputs and input service equals to 21. How 21? Already you computed inputs 12,000 plus input services 9,000, right there. 12,000 plus 9,000, 21,000. Still, what is the balance in input tax credit after refund? 18,000, right there. Next line. Balance in ITC after refund. Balance in ITC after claiming refund. How much? 18,000. What is that 18,000? Capital goods related input tax credit. Now you tell me what you will do with that 18,000. It's in which place? ITC. So you will have some liability. Correct? When you will get liability as an exporter, you may make a domestic sale. Correct? And for the purpose of domestic sale, you can use this credit of capital goods. So therefore, this credit will be there in your ledger. Whenever you make some domestic supplies, you can use. Sir, what if I am not making domestic supplies at all? It will be there in your ledger forever. Life? No life. Infinite life. You understood? So generally in Indian mythology, there are some superheroes who will be called as, Chiranjeevis. Like they will be staying alive for years. Like that input tax credit, no death. It is also on Chiranjeevi. You understood or not? And whenever you transfer the business, ITC also gets transferred. ITC is called as an asset under mergers and acquisitions. So even ITC gets transferred. Only when you close down the business, ITC will die. Until that point of time, ITC will be alive. It's not like set off and carry forward in your income tax where in 8 years only you can carry forward. Nothing like that. infinite life that will be there in your ledger. Once you avail it, you can keep it, okay. Then and therefore what you need to do in this case, conclusion, it is advisable to go for option 1. But what is the disadvantage in option 1? Time value of money, you have to pay that and you need to wait till the time you get the refund. Then there is another question here. What will be your answer if export turnover is 5 lakhs and domestic turnover 3 lakhs? In the first part we did the question answer computing everything as export turnover. Now there is a change. What is that? We have partly export turnover and partly domestic turnover. Possible? Yes. Then in that case we will see what will happen. Now write down another case. Give a heading partly export and partly domestic turnover. Partly export and partly domestic turnover. Now option 1, what is option 1? Pay IGST on export, export upon payment of IGST or pay IGST on export, anyway you write, and get refund of such IGST. Export upon payment of IGST and get refund of such IGST. Now what is a gross liability? Gross liability same because that 8 lakhs only we have division as domestic and export. So write down gross liability, below that next line domestic, gross liability, below that domestic, in brackets. What is the domestic turnover, boss? 3 lakhs. 3 lakhs into what is the rate? Same rate, 12%. 3 lakhs into 12%, outer column 36,000. Then next, export turnover, exports. What is the export turnover? 5 lakhs. And which option it is? Payment of GST. So therefore 5 lakhs into 12%, 60,000. So total 96,000, no change. Below that, input tax credit. Input tax credit, same 39,000, no change. Already we did in the previous computation, 39,000. How we got the 39? Already we know 12 plus 9 plus 18, 12,000 plus 9,000 plus 18,000. Net liability 57,000. Net liability 57,000. And below that write down refund. How much? How much? 60,000. Why 60,000? On export, how much IGST you paid? 60,000. That much only you will get as refund. Refund sanctioned by Customs Department equals to 60,000. Refund sanctioned by Customs Department equals to 60,000. And see this interesting logic. You know how that 60,000 is arrived? Concentrate. How much you paid on purchases? 39. And this 39,000 is used for both domestic turnover and export turnover, correct? What is the ratio of export turnover to total turnover? 5 by 8. 5 is export, total is 8. How much? 39,000 into 5 by 8, 375. Then on outward supply, how much you are paying? 57,000. On 57,000, what is the proportion of export to total? 5 by 8. How much? 625. Total these two, 60,000. Now that's where they had said IGST on export they will get refund instead of giving this way, because this way and all if you do computation, people, common person cannot understand. So they are telling whatever is the IGST on export, that much you will get as refund. So therefore the logic behind is simple. On input tax credit 5 by 8 and on outward liability, net liability 5 by 8, that is 35,625. So this is what 60,000, which is nothing but IGST on export. Okay, but logic and all, no one will ask how the logic of IGST 60,000 is arrived and all in exam. For your reference only, I told you that I am talented, that I know the subject, I am proving. Okay, you don't have to learn about that. You know IGST on export, you will get as a refund. Okay, then next, listen, how GST, like customs department will come to know that we are paying this IGST on export, because this IGST we will pay at the time of export to GST department. How customs department will get to know this information? See this, in GSTR 3B table 1, in GSTR 3B table 1, we have to enter the details of outward supplies. This is a common mistake that a number of people are doing today, is that they will show this liability IGST on export 60,000 is there na, this they will show along with the regular liability, and they will show 96,000 under outward taxable supplies. In one line itself they will show table 3.1a they will show. But the problem is, if you show in table 3.1a, customs will not sanction the refund, the application will be stuck there, customs will not give 1 rupee refund also. So you need to separate that. Where you need to show, see there, B, table 3.1b you need to show that 60,000 and GST, you got it. And in table 3.1a you need to show your regular liability. What is that regular liability? That 30,000, 3 lakhs into 12%, 36,000 is there na, that you need to show there. And whatever information that you have shown in table 3.1b will be pushed to the customs department, and customs department will be aware and they will be sanctioning the refund. So this, the moment you open 3b itself, this dialog box will come. So in the dialog box, see the wording what is given. IGST amount to be paid on export of goods or service outside India or to SEZ are filled under table 3.1b and not under table 3.1a or C. Suppose if you are filling there, you will not get, and whatever IGST amount filled in table 3.1b of GSTR 3b is either equal to or greater than, even in GSTR 1 we need to report that. Okay, see this, none of the export invoices shall be processed for transmission to ICE gate. So because customs, ICE gate is customs common portal, the full form of ICE gate is Indian Customs Electronic Gateway, Indian Customs Electronic Gateway, that is known as ICE gate full form. Okay, so this ICE gate is the customs common portal and GST common portal. From GST common portal the data will be transmitted to customs common portal. Got it? If you are not reporting separately, then it is gone, you will not get the refund. So but sir, I am telling you little bit of practical, little bit only, all these are just hardly 5% only. In regular batch and exam oriented batch more detail I will be telling, but fast track batch you don't need that from exam point of view. That's the reason why, wherever required only I will tell, otherwise not. But whatever I am telling also is not useful for exam, but for understanding little bit conceptually you need to know this, that's why. Next, option 1 finished. Option 2, option 2. Option 2 is what? Export without payment of IGST, export without payment of IGST under bond or LUT and refund of ITC. Export without payment of IGST under bond or LUT and refund of ITC. Now, so what is the gross liability? 36,000. On export 0, but on domestic it will be there, right there. Gross liability in brackets only on domestic, only on domestic, 36,000. 3 lakhs into 12%, 36,000. How much ITC you have? 39,000. Can we spend that 39 for payment of this 36? Why? No, Usage of input tax credit we can. Refund only on inputs and input services. I am not talking about refund now. I am talking about usage. Can we use input tax credit for payment of our liability 36,000? Yes, including capital goods. But what I told you is refund of capital ITC with respect to capital goods we will not get. But we can use the input tax credit for payment of liability minus input tax credit. How much is the input tax credit you have? 39. So we can use 36,000 for payment. Fully we can use. So net liability 0. Net liability 0. Now refund of ITC. How much we will get as refund of ITC? Full 21,000 we will not get. Why full 21,000 we will not get? Because that 21,000 is partly used for domestic and partly used for export. So we will get the proportionate. To what proportionate? 5 by 8. So calculate. Refund of ITC equals to ITC on inputs and input services. ITC on inputs and input services multiplied with what by what? Zero rated turnover divided by total turnover. Zero rated turnover divided by total turnover. See, export don't write because even SEZ also we will get na. So zero rated turnover by total turnover. So what is the ITC on inputs and input services? 21,000 into numerator 5, denominator 8, 5 lakhs, 8 lakhs, 13,125. But this is the maximum refund. Refund as per formula. This is refund as per formula. But how much is the balance that you have in the ITC? 3,000. So 3,000 only you will get. Why? 39,000 you had. You spent 36,000. What is the balance that is there? 3,000. So you will get the refund only 3,000. So write down below balance in ITC before refund. Balance in ITC before refund. How much is the balance in ITC before refund? 3,000. How 3,000? 39,000 is the total ITC. Just now you spent 36,000 for payment of liability. So the balance is 3,000. Therefore refund equals to 3,000. Why 3,000, sir? Even though you are eligible for 13,125, but you have only 3,000 rupees. It's like you have a debit card, and using the debit card you can withdraw 10,000 rupees per day in a ATM. You go to the ATM, you use the debit card and money is not coming. Why? There should be balance in your account. You understood? Balance in the account, how much is there? That much. If 100 rupees balance is there, how 10,000 will come? How many times you try also you will not get. So yes, you are eligible for a 10,000 withdrawal limit when if you have account balance. If you don't have account balance, who will give? Like that you are eligible for 13,125 as refund, but that is subject to balance in ITC. Why you don't have balance in ITC? Because you utilized it for payment of liability. No sir, I will not utilize it, sir. I will pay by cash and wait for the government to give refund. You will be a biggest idiot. Why? Pay by cash today and wait for the refund. No will do pa. So no one will do. Time value of money is involved na. That's one of the primary job of a treasury manager, to save the time value of money. So definitely no one will follow that. So if they have input tax credit, they will definitely try to use it. You understood this answer? Already I gave you all those things, but I made you write because you should know how in exam you need to approach that and arrive at the answer. For practice sake I gave you. Then open your book and look into page number 5. GST Council. Again, this is not for exam, just for understanding purpose. GST Council is actually a decision making body, because GST is levied now by both central government and state government, which means decision making should be done by both. independently they cannot do the decision. For that reason they constituted one council, and in this council there will be union finance minister as well as state ministers, state finance ministers will be there. So how many states we have seen? 31 states. How? 28 plus 3 union territories with state legislature. So 31 state finance ministers will be there, and for 5 union territories one MP will be appointed who will be in charge of the revenue for these 5 union territories, one union MP plus union finance minister. So total 33 members will be there in the GST council, and the quorum is 50%, means 18 members should be there. 18, 33, half is what? 17. 17 members should be there in order to constitute a valid meeting, and chairman will be always union finance minister. In the absence of union finance minister, the union MP will become the chairman of the council, and prime minister is no way connected to the GST council. Even chief ministers are not in the GST council. So therefore tomorrow easily they will be telling we don't know anything about GST. In a way it is like creating a demarcation. So you go and ask Tamil Nadu CM anything about GST, he will simply say I am not looking into it, it's not in my domain. Okay, why? GST council. And who is there in GST council? State finance minister. That state finance minister, if he speaks anything, we will remove him and we will put some other finance minister. You understood? So nice liberty we have got. Okay, so this weighted votes, central government will be 1/3 vote and state government will be 2/3 votes. This is a weightage because people should not think that central government completely have taken decision one side. No. See, today if any problem is there in GST, you should not blame union finance minister alone. We should blame all state finance ministers, because 2/3 weight is given for the decisions that they take. 1/3 is only for the union finance minister and union MP. 2/3 weight is given to state finance ministers. These people will simply say, we don't know anything, we went to the GST council meeting, we said but they did not listen. No, nothing of that sort will happen. So if they say they will listen, reason being these people are having the voting right, highest voting right, state governments. Then to take any decision, that to simple majority, again see, 3/4 weighted majority they are telling. So like a special resolution. So 75% should agree, because otherwise you will say majority of the states are under the control of the ruling government, then whatever BJP says then everyone will listen. Not like that actually, because 75%, where 75% is with BJP, they don't have. So even state finance ministers, it's not MPs. MP is different from state finance minister. State finance minister is MLA. State finance minister is MLA, not MP. MLA who has been given a ministry. Sometimes not being MLA also they will give ministry. Sometimes one time elected MLA also, because he is a legal heir, will become sports minister also. So possible. Okay. So that is what minister I am talking about. Okay. So ministers will be going, means they are purely state representatives. So in that state the central government may not be there at all. You take South India, where central government is there in South India? Nothing. And there are many states in India where central government is not there in the states. So then those state finance ministers can definitely make representation there, because 75% is a majority that is required. Then other points, France became the first country to implement GST, and who recommended the GST? Dr. Kelker task force, and effective date of implementation of GST is 1/7/2017. Then there is something called as GST network. So GST network is the common portal of GSTR. That is, today any kind of communication between the government and the taxpayer is through the portal only. This portal acts as a single point of communication between the taxpayers, government and various stakeholders like banks, financial institutions and other parties. So this GST portal or GST network is a government entity, 100% government owned entity, which is established only for the purpose of providing IT infrastructure for smooth implementation of GST. Not smooth and all. So it provides information technology infrastructure for implementation of GST. It is referred to as common portal and provides service to whom? Taxpayers, central government, state government, banks and other stakeholders. it's a government owned entity, 100% government entity. In that 50% is owned by central government, remaining 50% is owned by the state governments. And basically what are the functions of GST network? It facilitates registration, payment of taxes, filing of returns, whatever returns we file, payment of tax, registration, claiming refund, that is all kind of interactions between the government and taxpayer will be through the portal only. So with this we completed segment 1, but in that segment 1 only one area which can be tested in exam, which will be definitely tested in exam, is that zero rated supplies, remaining just for understanding purpose. But from segment number 2 is important, which is there in syllabus, but segment 2 is an intermediate portion. So in your CA intermediate you would have learnt, but there are some changes from the time you have learnt to today, little bit of changes are there. Segment 2, which is talking about supply under GST. What is supply under GST? Means taxable event. Whenever supply happens, we need to pay GST. Where is this supply defined? This supply is defined under section 7 of CGST Act. Whatever sections that we are learning majorly will be of CGST Act only. In IGST Act, we have very few sections that we will be learning in charge under IGST, like that one chapter is there. You just see the index, charge under IGST, like that one chapter is there. In that chapter and place of supply chapter, in these two chapters only we will be learning IGST Act. In remaining chapters and all, it will be only CGST Act. So whenever I am telling about section number, it will be of CGST Act, unless otherwise I am referring to those two chapters. Okay. Now, section 7 of CGST Act talks about supply. You can see the overview of supply here. Supply is divided into 4 parts. Supply includes, supply excludes, and classification of supply into goods or services. 7(1)(a) and 7 subsection 3. Central government on the recommendations of the council can reclassify supply of goods into supply of service and vice versa. But this 7 subsection 3 is not applicable at present. Even from the beginning, they have not given any such thing. Please try to understand. First, an activity will become supply or not a supply, we need to see. For that, we need to refer to 7 subsection 1 and 7 subsection 2. Based on that, you know whether an activity becomes supply or not. Any activity for that matter, any activity or any transaction. For example, I am taking classes for which I am getting some money. Is it supply or not? We need to first check. So that we need to check based on 7 subsection 1 and 7 subsection 2. Once the activity becomes supply, the second aspect is classification of that into goods or services, because in GST we have separate provisions for goods and separate provision for services. Even though the law name is same, Goods and Services Tax Act, but we have separate provisions for goods and separate provision for services. So we should classify that. And once we classify that, accordingly the provisions we will see, like RCM or exemptions, etc. we will see based on that. But whenever we classify it into goods or services as per 7(1)(a), government is having power to reclassify. We classified an activity as supply of service. For example, whatever classes that I am taking now to you is supply. Why it is supply, later we will see. It is supply. Is it supply of goods or supply of service? It's a supply of service. But central government can reclassify it as supply of goods, and supply of goods can be reclassified as supply of services and vice versa. But as on today, up to today, they have not classified anything. So this 7 subsection 3 is practically irrelevant. Okay. So you don't have to remember 7 subsection 3. What you need to remember is only 3. 7(1). What is 7(1)? Inclusions. 7(2). Exclusions. 7(1)(a). Classification of supply into goods or services. Now in that we will go to 7 subsection 1. Inclusions in the meaning of supply. You can see total 4 clauses there. 7(1)(a), B, AA and C. Previously when you studied A, B, C was there, but this AA was added at a later point of time. Total 4 clauses are there. Read section 7(1)(a). Any activity in the nature of debts RLL. What is this debts RLL? D for disposal, E for exchange, B for barter, It's there, it's there, it's there, it's there. Don't write, it's there. First listen. D for disposal, E for exchange, B for barter, T for transfer, S for sale, R for rental, L lease, another L license. These activities, and you can see what are the meanings of these activities. You can see at the right hand side of the chart: disposal, exchange, barter, transfer, sale, rental, lease and license. Okay, disposal is a word usually used in the context of waste and scrap, or some assets which I don't need, it has a residual value which I am selling, then I use the word disposal. When we don't need something, when we don't attach much value to it, we call it as disposal. But disposal is also in a way sale only. Then what is the difference between sale and transfer? Sale is transfer of property in goods from one person to another person for cash, for deferred payment or any other valuable consideration. There are certain ingredients to constitute a sale. First there should be a contract, consensus addendum, identity of mind. Somewhere long back in your childhood you would have studied Sale of Goods Act. What is the meaning of sale, like that? Okay, so those elements are present, then it will be called as sale. Then what is transfer? Otherwise than in pursuance of contract, if there is any transfer, we call it as transfer. So that can be relinquishment, extinguishment or succession, inheritance. In capital gains, the meaning of transfer you will be learning. Those transfers, everything will come, not necessary sale. For example, compulsory acquisition, like that you would have heard one term. What is it? Compulsory acquisition. I don't want to sell, but government will be coming and purchasing from me, correct? I don't want to sell, but I am forced to sell. It is called as compulsory acquisition. Now is it sale? No. In order to become sale, there should be contract and intention to sell. I don't have intention to sell, but even then I am selling, so it will come under a transfer. And you would have seen this word called as extinguishment of right. That is, whenever the asset get damaged, fire accident, insurance company will come and take over that asset and they will pay the compensation. So we don't want to sell the asset. First of all, the asset itself is not there, the remains of the asset only they are taking. This is known as extinguishment or relinquishment. You understood? All these are called as transfers. Sale, transfer, disposal. Got the clarity about these three words? Then next, barter and exchange. Barter is also exchange, exchange is also exchange. Then what is the difference? In barter, there will be exchange of goods for goods, goods for services or services for services, but in exchange we will pay partly in cash and partly in kind. For example, you are buying a new TV and exchanging your old TV and paying the difference, that is only called as exchange. But barter is like literal goods for goods, services for service or goods for service. Then we have rental, license and lease. These three are used in the context of transfer of right, not transfer of title. For example, I have immobile property. I am giving you the right to use the immobile property. I will not call it as sale, I will call it as rental or lease. Whereas in case of license, license is in the context of intangible property. For example, I have a patent, copyright, etc., which I am giving you, not selling you. I am giving you, for which you will pay a royalty or license fee. That is this license. So should we remember this, sir? No, because these are some illustrative activities which will be covered under 7.1a. Apart from this, any other activity also may come under 7.1a. Any activity in the nature of these activities, you understood or not? Not these activities only, any activity in the nature of these activities. And two conditions are there in 7.1a. See there, for consideration in the course or furtherance of business, then only it will become supply under 7.1a. Now you tell me whether the classes taken by me for a consideration come under 7.1a. Activity taking class. Sir, but it is not coming under sale, barter, etc. That's what. Any activity in the nature of those activities, but those activities are not relevant. Apart from that, any activity or transaction will come. And is it for consideration? Yes. In the course or furtherance of my business? Yes. Therefore, it will become supply under 7(1)(a). And you are selling old newspapers. So, whatever old newspapers that is there in your home that you are selling, you got some money. Now, tell me, is it supply under 7(1)(a)? What is the activity? Sale of old newspapers. Consideration? Yes. In the course or furtherance of business? No. As it is not in the course or furtherance of business, it will not come under 7(1)(a). Same way, when you sell one old mobile through OLX, will it come under supply 7(1)(a)? No. Because you are selling for consideration, but not in the course or furtherance of business. What if the same sale of old mobile is done by a second-hand mobile dealer? Then it will be in the course or furtherance of business, therefore it will come under supply. So basically personal activities will not come under supply 7(1)(a). Understood? Then next, 7(1)(aa) you read and tell me what is the difference between 7(1)(a) and AA. 7(1)(a) and 7(1)(aa). A is any activity or a transaction between a person other than individual and its members for a consideration. Both places for a consideration? Yes. 7(1)(a) is between two independent parties, but 7(1)(aa) is between a person other than individual and its members. Who is person other than individual? Company, firm, HUF, AOP, BOI, company, body corporate. You understood? Person other than individual. In income tax, you would have studied the assessee person definition. Apart from individual, we have lot of persons: HUF, firm, LLP, AOP, BOI, company, body corporate, local authority, cooperative society, artificial juridical person, like that, other than individual. And its members. Who are the members of HUF? Family members, Karta and the co-partners. And then, so who are the members of a firm? Partners. Who are the members of a company? Shareholders. Like that, between the company and its shareholders or firm and its partners, if there is any activity or transaction, it will become supply under 7(1)(aa) if it is for a consideration. Now listen, previously also it was there under 7(1)(a). Under 7(1)(a), previously also we used to classify, but the problem was that how there can be supply between the self, because company and shareholders may be different, because company has a separate legal existence, but the firm and partners we cannot call as two separate persons, because firm is not having any separate legal existence. Then how can we say? That's why they added 7(1)(aa) in order to avoid the disputes and litigations. What they are telling, there is a partner, say I am a partner in a partnership firm, I provide some services to the firm, for which firm will give me the remuneration. This remuneration will now become supply under 7(1)(aa), which means partner drawing salary from the firm is he required to pay GST? I did not say that. I did not say that. What I said is services provided to the firm against a consideration is supply. Then salary is also like that, na sir? No sir, because salary and interest etc. which is collected by the partner is withdrawal of profit. Otherwise why you do PFAs in income tax? Otherwise why you talk about 40A which says that this much only allowed book profit, this much percentage only allowed? Why all these calculations? Because you know that which is nothing but withdrawal of profits. And partnership firm, if you are taking, they have to pay income tax, and partners if they are taking exemption limit they will be getting. So due to that reason you will withdraw the profits in the form of salaries to the partner. That's why they put a restriction under income tax, correct or not? So salary drawn by the partners is nothing but withdrawal of profit. There is no GST on that. Any withdrawal of profit, there is no GST. I invest something and I get a return on investment, no GST on that. Investment activity and return on investment, there is no GST. Please keep this in your mind. Got it? I invest in a business, I get the profit from that business. That profit is not supply, not chargeable to GST. So salary drawn by the partner from the partnership firm is also in the same line. But what is this, sir? If there is a separate agreement between the partner and the partnership firm to provide some services, for example, so you are a non-teaching person, I am a teacher, We both started one coaching center. You understood? I am a teacher, you are a non-teacher. You have money, I also have money. We both started a partnership firm, 50%, 50%, one coaching center. Done. Now, we both will do the business of coaching center. We get the profit and we share the profit equally. Plus, as we are looking after the business, we get the salaries also. You also take some 30,000 per month, I also will take 30,000 per month. Withdrawal of profit, not a supply. But I am taking classes now. You are not taking class, I am taking classes for which I should get some extra money. Yes or no? Now what I will do, I will make a separate contract with the partnership firm. And for number of hours I am taking the classes, I will take the money from the partnership firm. Yes or no? This money what I am getting will become supply under 7.1 AA as a teacher. Partner not in the capacity purely as a partner, but in their individual capacity provide services to the partnership firm and gets that money, that will become supply under 7.1 AA. You got it? Then another example, there is a company which is providing services to the shareholders by way of share transfer. Usually private limited companies, even public limited companies also, if they want to transfer the shares in some other person's name. Say for example, I want to transfer the shares in my name to my wife's name. So I cannot do it through stock exchange, because in the stock exchange, when I place the sell order and my wife places the buy order, there is no guarantee that I will only be selling to my wife, correct or not? So stock market we cannot go. Then what we need to do for transfer, we need to approach the company, and when I approach the company for transferring the shares from my name to my wife's name, so they will be charging me a share transfer fee. The share transfer fee which is charged to me is services provided by a person other than individual to its members. For consideration, it will become supply under 7.1 AA. Understood these two examples, pa? Then, so basically 7.1 A, 7.1 AA both are same, but 7.1 A is between any two parties, but 7.1 A is between a person other than individual and its members. 7.1 B you read. What is the difference between 7.1 A and 7.1 B? 7.1 A is any activity, but 7.1 B is only import of services. 7.1 A and B both requires consideration, but 7.1 A in the course or furtherance of business, but 7.1 B whether or not in the course or furtherance of business. And 7.1 A, you know, should be seen from the supplier point of view. Sale, transfer, barter, exchange, license, rental, lease, everything from supplier point of view. But import from whose point of view? Recipient point of view. So 7.1 A we should see from supplier point of view, and 7.1 B we should see from recipient point of view. Already I gave that in the next pages, okay? Just listen. Therefore, you are importing the services. For example, you are importing this OTT services, Netflix or Amazon Prime, etc. On import of these services, are you paying consideration? Yes. Assume that you pay consideration, you will not watch everything through Telegram itself. So sometimes you will spend money also. So therefore it is import of service for a consideration. Is it in the course or furtherance of your business? No, that's purely personal. Perhaps you cannot put it in TV also sometimes. Therefore, it is import of services for a consideration, not in the course or furtherance of business. Even it will become supply under 7.1 B. If it is for the course or furtherance of business, no doubt it is 7.1 B. Even if it is not in the course or furtherance of business also, they are making it as supply and asking us to pay GST. You know why? Because there is a foreign exchange outflow. That's why they wanted us to pay the tax in this case. Whereas in 7.1 A, why it is not covered? Because 7.1 A in the course or furtherance of business, directly 7.1 B they can say not in the course or furtherance of business. Why they are telling whether or not in the course or furtherance of business? Because 7.1 A is from supplier point of view. So import of service will never come under 7.1 A. Import of service will always come under 7.1 B. So that's why whether or not, if it is in the course or furtherance of business or not in the course or furtherance of business. And next, why import of goods is not given here in 7.1 C? Because import of goods is a subject matter of customs, as it is covered under the levy of customs duty. Due to that reason, it is not given here. Then 7.1 C you read. Activities in schedule 1. There are some list of activities in schedule 1, even though not for consideration. So when you need to refer to 71C, when there is no C. When there is no C, refer 71C. What is that C? So when there is no consideration, refer 71C. That is the primary criteria. Don't blindly refer to 71C always. First there should not be consideration, then only you need to refer to 71C. And 4 activities we have in schedule 1. DRIP, D for disposal of business asset on which ITC is availed. What is that? I am purchasing an asset. On that purchase of asset I paid the GST and I took the ITC of that. This asset I am disposing of without any consideration. Example, I purchased an AC and on purchase of AC I paid GST and availed as ITC. Now that particular AC I am disposing of without any consideration, means I gifted it to one orphanage or one old age home, etc. Is it supply or not a supply? It is supply under 71C. Why? First, is it asset, business asset? Yes. ITC availed? Yes. Disposed of? Yes. For consideration or without consideration? Without consideration. It will become supply under 71C. But in 71C, disposal of business asset, nowhere they use a word in the course or furtherance of business. Check there. They said the word disposal of business asset on which ITC availed, but nowhere it is given that it should be in the course or furtherance of business. Understood? And what is the meaning of that disposal of business asset in the course of business? Whatever example I gave you is not in the course or furtherance of business, orphanage or old age home. What is that in the course or furtherance of business? Suppose to my employee if I am giving, it is in the course or furtherance of business. Why? As an employee welfare I am giving. Usually lot of software companies follows this. So laptops and all they will replace for every 2-3 years. 60% na depreciation on laptops. Income tax. What yeah? Section 32. Laptop block of asset depreciation is 60%. Okay. 40 not 60. Oh. So 40%, let it be. 3 years over na. Thereafter it is negligible value. Now what they will do? They will replace. Yes, many companies will replace. When they are replacing, what they do with the old laptops? They will be giving it to their employees. And free. Employees freely they will be giving, because if they sell also they will not be fetching much value on that. So they will give it to their employees for free. And these employees will be giving it to their kids or to their relatives and all, they will be giving it for free. Now in this case, disposal of business asset on which ITC availed, but that disposal is in the course or furtherance of business, or maybe as a part of CSR also they can do something, then it will also be in the course or furtherance of business, or voluntarily also they can do, not in the course or furtherance of business. All these things don't see. Is it disposal of business asset on which ITC availed? Yes, it is supply under 71C. What if ITC not availed on that business asset? Then it is not a supply. Example, I am purchasing a car. At the time of purchase of the car, I cannot take ITC. Why I cannot take ITC at the time of purchase of the car? Because it's a blocked credit. There are some inward supplies on which I cannot take ITC, that is known as blocked credits. So therefore this car is a blocked credit in this case. At the time of purchase of the car I have not taken any ITC, but in the name of the business I purchased the car. After some 5 years or 6 years I am transferring this car to one person without any consideration. Now will it become supply under 71C? No. Why it will not become supply under 71C? Again see there. Is it business asset? Yes. Disposal of business asset? Yes. On which ITC availed? No. We have not availed ITC, consequently it is not a supply. Understood? Then what if I purchased a car, ITC not availed, that car I sold for a consideration? Will it become supply? Yes. I should not refer to 71C because there is consideration na. When there is consideration I need to refer to 71A. So as per 71A it is for consideration, so it will become supply. Got it? Then one more example, you answer this. I am manufacturing shampoo, okay, hair shampoo, hair oil I am manufacturing, and this shampoo and hair oil if you apply you will not have any hair loss problem, only a person don't have it will know the worth of it, okay. So therefore So this hair oil and hair shampoo, if you apply, you will not have hair loss problem, okay. So I am purchasing some raw material for making this. And how to promote this product? So we cannot do big branding and all for this. We have lot of YouTubers, so who post every shit. In that they will also speak about this. Suddenly one person will speak, you know, I applied this hair oil like that and all. Context itself will not be there, but they will be talking about this, okay. And this hair oil I applied like that, paid promotion, okay. This paid promotion I will do and I will give it free first. First I have to give it free. Free means our people will drink penile also, okay. So therefore free, people will stand in the queue and they will purchase this shampoo and hair oil. So because I saw one video, this Rameshwaram cafe, like that one hotel is there, which is a Bangalore based restaurant, and they became so popular in Bengaluru, and lot of joints, food joints they have, and they sell ghee in the name of dosa and idli. And so these people started a restaurant in Hyderabad. Freely they gave. Here crowd is crazy here. Lot of people are coming, standing. People came in car and they are standing and eating. Here you can come in car. For the car petrol you can put. So can't you wait for 2 days so that you can pay and eat? No, free. Free. Free means that emotion will come automatically. Free. So therefore freely I gave shampoo and hair oil, and people like got it. Now tell me, can I take ITC on the raw material purchase for this hair oil and shampoo? Huh? First, is it supply or not a supply? The shampoo given free to my customers, free, is it supply or not a supply? 71A will come? No. 71C without consideration, is it disposal of business asset? Why shampoo is not my business asset? Then where I will show in my balance sheet? Inventory is not asset. Asset only, no. Inventory will show in asset only, na yaar. You will not show somewhere, no, in P&L. Asset only, okay. So inventory is asset pa. Therefore it is my business asset. Business asset am I disposing of? Yes. Whether ITC availed on this? Impossible. What I am purchasing is raw material. What I am giving free is finished goods. How can I avail ITC on finished goods? Because finished goods I make. If I buy this and give it for free, disposal of business asset on which ITC is availed will come. But I am making this shampoo and I am giving it free. So even though it is business asset, but ITC not availed on this asset. Whatever I dispose of, on that I should have availed the ITC. You got it? What I am disposing of? Shampoo. On that did I avail any ITC? No. What I purchased is raw material. So will it become supply or not a supply? No. You understood the meaning of disposal of business asset on which ITC avail? First there should be business asset, and that business asset is disposed of, and on that business asset ITC should be availed, and the business asset can be fixed asset or current asset. Then are for related party transactions, including transaction between distinct persons. So there are some parties who are treated as related parties. Between that related parties, if there is any transaction involving goods or services, that will become supply even though without consideration. And we have a related definition that we will see. Then distinct persons. One registration of a person to another registration is known as distinct person. For example, I have a registration in Tamil Nadu and I have a registration in Karnataka. These two registrations are treated as transaction between distinct persons. If there is any activity between them, even though without consideration, it will become supply. For example, head office or a factory in Tamil Nadu and a depot in Karnataka. Factory to depot, they will be transferring the stock. Will it become supply? Yes, even though without consideration. So what is the disadvantage of this? Stock transfers, branch transfers, etc. and all will become supply and chargeable to GST. Of course, the other person can take it as input tax credit, but they need to adjust with their liability. Until that point of time, there is a cash outflow problem. You understood? Then next, we have DRI, I for import of services. Please compare import of service between 71B and import of service in 71C. What is the difference? 71B consideration, 71C without consideration. 71B import of service from any person, but 71C import of service is from a related person or another establishment located outside India. And 71B import of service whether or not in the course or furtherance of business, but 71C import of service should be in the course or furtherance of business. So that is the differences between this. Now please concentrate. Like say I want to start a mobile manufacturing company in India, because in India we don't have proper mobile manufacturers. Even it was there and they have shut down and left, and we have only foreign companies started doing manufacturing operations in India. But I want to make one Indian mobile, okay, made in India, purely, not make in India, made in India. So this made in India, say we can call it as pineapple phone, like that. Apple competition, pineapple, like that. And there are only two operating softwares across the globe, either iOS or Android. iOS will not give. I have to go for Android only. And when I ask for Android, Google will tell, Google is the owner of Android, na? So what they will say, already we gave lot of Android softwares, so we don't want to give and create a competition for us, because we are also doing manufacturing. That's why if you see, new companies are not coming. So why new companies are not coming? Because so Google put lot of restrictions, and I wanted to release this phone. So now I will ask Google, no, I need this software, you tell me what are your conditions. Okay, you give us 60% stake in your company and we will give you software for free. Okay, take 60%. 60% equity I am giving to them, and out of profits I have to share 60% with them. It's okay, 40% profits is enough for me, and because profit after deducting all expenses only, na, so I am ready, because I am getting the software for free and I will get it. Now import of service from a related person, holding subsidiary, related person, for consideration or without consideration? Without consideration, because I am getting the software for free, but indirectly there is consideration flowing from India to abroad in the form of share of profit. That's why they are telling it is supply under 71C. You got the clarity? Import of service without consideration from a related person. How? There will be flow of profit to them. You got it? So import of service without consideration from a related person, but is it in the course or furtherance of my business? Yes. So it will become supply under 71C. Then next, P for principal agent transactions. Any transaction between the principal and the agent, that is consignor, consignment agent, etc., even though it is without consideration, because when the consignment agent will pay consideration to the consignor, somewhere in foundation consignment chapter you would have studied, when the consignment agent will pay money to the consignor, only when the consignment agent sells it to a buyer, he will receive the money from the buyer and he will remit it to the consignor, correct or not? That too after deducting his commission. Until that point of time, consignment agent will not give money to the consignor. There is no consideration itself at the time when consignor send the goods on consignment to the consignment agent. That is the stupid reason why this goods sent on consignment we will show as closing stock in the final accounts. Okay, so because goods sent on consignment, instead of in our place, it is there in that place, and we will never show it as sales. So we will create a separate consignment account, we derive the profit, and that profit we will bring it to the final accounts for that reason only, because when you send the goods on consignment, it is not considered as a sale. So therefore, even though it is without consideration, but they are asking us to treat it as supply between principal and the agent. So tell me what are the four activities for DRIP? D for disposal of business asset on which ITC is availed. R, Related party transactions including transaction between distinct persons. I. Import of services from a related person or another establishment located outside India. Then in the course or furtherance of business. P. Principal agent transactions. When agent is acting on behalf of principal. Now you can see the summary of 7 subsection 1. There I have just given those differentiating points, like from whose perspective we need to see, etc. Page number 8. 7.1a from whose point of view, pa? Supplier. Any activity, consideration, yes. In the course or furtherance of business, yes. And coverage, let it be goods or services. 7.1aa. 7.1aa is what? Any activity between a person other than individual and its members. Consideration, yes. Course or furtherance of business, yes. Point of view, supplier. Coverage, goods or services. 7.1b, import of services. Consideration, yes. Course or furtherance of business, may or may not be, yes or no. And point of view, recipient. Coverage is only services. Whereas 7.1c, DRIP, in that all these 4 cases consideration is not there. For D, whether or not in the course or furtherance of business, but in the other 3 cases it should be in the course or furtherance of business, and everything should be from supplier point of view except import of services. And coverage, disposal of business asset. Business asset is what? Goods. Then related party transaction, both goods and services. Import of service, specifically services. Remember, principal agent transaction only for goods. We don't have services here. Principal agent transaction without consideration will become supply only if it is goods. If it is services, we will not have. Okay. So this is about 7 subsection 1 inclusions. Then look into 7 subsection 2 exclusions. So actually you need to first check 7 subsection 2. Whether an activity is excluded from the supply or not. If the activity is excluded from supply, then it is not a supply. Not a supply. And suppose if the activity is not excluded from supply, then you need to check 7 subsection 1. If it is covered under 7 subsection 1, it is supply. If it is not covered under 7 subsection 1 also, then it is not a supply. So when an activity will not become supply, 2 cases. If it is covered under 7 subsection 2 or not covered in 7 subsection 1. Okay. Now 7 subsection 2 exclusions, the list of exclusions is given in schedule 3. There are 3 schedules pa. Schedule 1 talks about list of activities will become supply even though without consideration. So whenever you are referring to 7.1c, you need to write read with schedule 1. So keep this in mind, or you write down. So these are the references we need to give properly when you are writing, because they expect at CA final level. See, intermediate portion and all, you should be so thorough with section numbers. With section numbers. So because when you are writing in the exam, they expect you to be proficient in that. That's why. So section 7.1c is schedule 1. What is that schedule 1? List of activities, constitutes supply even though without consideration. List of activities constitute supply even though without consideration. That is 7.1c. Then section 7 subsection 1 capital A, read with schedule 2. 7.1c read with schedule 1. 7.1 capital A read with schedule 2. What is this? Classification. Classification of supply into goods or services. Into goods or services. Then section 7 subsection 2 read with schedule 3. What is this? Exclusion from supply. So whenever you refer to 7(1)(c), write read with schedule 1 of CGST Act. 7 subsection 1A read with schedule 2 of CGST Act. 7 subsection 2 read with schedule 3 of CGST Act. Like that you should write in the answer. Okay. Then, so look into the activities. The list of activities you can remember with a keyword spelled slow. S for sovereign functions of government. See, these activities are excluded from supply. Sovereign functions of government. What are the activities of government which is covered under supply and excluded from supply? See there, all activities of government is excluded from supply except 4. Means 4 activities are covered under supply. What are they? First is government, a person under GST. Yes, government is also a person under GST, because government, central government, state government is not a person under Income Tax Act, because income tax, the person who pay the tax will bond the incidence of the tax also. But in indirect tax, the one who pay the tax can in turn collect it from the next person. For example, you take Indian Railways. Indian Railways not required to pay income tax, but Indian Railways is required to pay GST, because the burden is not on Indian Railways. In turn, they will collect it from the passengers and the traders who transport the goods through Indian Railways. You got it? So government is also a person under GST, but not all activities of government is covered under supply. Only few activities are covered under supply. What are the 4 activities? Please see the list there. Number 1, Department of Post. Examples: speed post, registered post, express parcel post, life insurance services, Aadhaar enrollments, etc. So these activities are done by the Department of Post. And then number 2, transportation of goods or passengers. Example: Indian Railways or roadways. Lot of roadways we have not transportation. State government owned a transportation sector, and even some goods also they will be transporting. So that is coming under transportation of goods or passengers. I am talking about government doing transportation of goods or passengers. Number 3, airport or port. Is airport owned by government? Yes. Yes, airport is owned by government, but some airports they are privatizing, but airport is owned by government. Port is owned by government, and airport is under Airport Authority of India, which is under Ministry of Civil Aviation. Port is under Port Trust of India, which is under Ministry of Shipping. So therefore these 2 are covered under government. So now whenever they allow the airport and port to be used by the shipping companies and the airlines, they collect some rental na. That rental which is collected will be coming under supply. That is services provided by port or airport. Then 4th one, services provided by business, services provided by government to business entities. So these are the 4 activities of government which is covered under supply, and all other activities are excluded from supply. Now I will give you an example. You tell me, is it covered under supply or not? Say I want to take a metro connection to my building. For that purpose, I get the connection and I pay metro charges to Tamil Nadu Water Supply Board, Metro Water Supply Board. Now these charges, water charges what I pay for my house, is it covered under supply or excluded from supply? Why? Is it Department of Post, transportation of goods or passengers, airport or port services, services to business entities? That's why it is not a supply. Had I taken this metro connection for my office building and I pay the charges, then yes, it will come under services to business entities. Same way, I am applying for a driving license. I have to pay some charges, not below the table, above the table. So these charges which I pay to RTO, is it covered under supply or excluded from supply? Excluded, because it is to other than business entities. Suppose if a company purchases a car and registers that car in its name, they have to pay registration charges to RTO. Whether this will be coming under supply? Yes. Why? Services to business entities. Is it clear? Then I go to post office to send a greeting card to one person, speed post. Now in that case, will it become supply or not a supply? Supply. In case of Department of Post, don't see business entity or other than business entity. Even in case of transportation, don't see. Airport or port, don't see. Only in case of other services, you see whether it is to business entities or not. Apart from this, for all other activities of government is excluded from supply. Understood, boss? Then P, posts, that is government post, constitutional post and nominated posts. Government post means what? MLAs, MPs, so they get some remuneration from government. On that, are they required to pay GST? No. Won't it become salary, sir? Definitely not. It will come under IFOS. It will not come under salaries, it will come under IFOS. Somewhere in intermediate you should have studied. So therefore, it is not a salary. If it is salary, anyhow no GST, because see the E point, employee to employer in the course of employment. Can you see that? E. Employee to employer in the course of employment. So salary is not chargeable to GST, it is excluded. Already they are paying enough of income tax here. Everything we add, na, allowance, perquisite, this, that, like that. So everything we are adding and they are paying. And again, if you ask them GST, no, on their expenditure also there is GST. How much they will pay? Already on salary they pay income tax. On their expenditure they are paying GST. Again, if you charge GST to them, they all will become terrorists here. You understood? So therefore, there is no GST on salaried employee. But this MLAs, MPs are employees. No, they are not coming under employee category. So that's the reason why whatever money they receive will not come under salaries. It will come under IFOS. Then let them pay GST, na sir. No, they are. How can you charge them? They are sacrificing their life for the sake of people of this country. So you cannot ask them to pay. So therefore, government post, no GST. You understood? Whatever money they get, they don't have to pay GST on that, okay? Because they are working for the people, public, okay? That's why. Then constitutional, and you are becoming a MLA is superb. How much do you think one MLA will get in Tamil Nadu per month? 6 lakhs including perquisites per month. More than a 20-year-old experienced CA, okay? So 6 lakhs including perks to one MLA in Tamil Nadu. Amazing remuneration. Only 5 years their tenure will be, but they know how to come for the next 5 years also. And so whether you are winning or losing, your government is winning or losing, your party may be ruling or not, you get. You understood? So MLAs are paid that much of remuneration. And this amazing job it is. MPs also, superb they will be getting. And government post, no GST on the top of that. Then constitutional, example, constitutional post, President of India, Governor of the state, etc. and all. Then even we have this Chief Justice, like that some constitutional posts are there, na, collector. So on these posts and all, whatever remuneration they receive, no GST. Usually, these ruling parties, some old people will be there in ruling parties who will not be fit for anything. And those people, like say BJP, some old party members of BJP who will not be fit for anything. If they speak and all, people will troll. They will be sent as governors to some state like Telangana or Pondicherry, like that. So they will be sending them as governors and pay some remuneration to them. That is not chargeable to GST, excluded from supply. So government post, constitutional post. Then nominated post. What is nominated post? Government will have a body or board. The head of that body or board will be appointed by the government. Example, you take this RBI, Reserve Bank of India, will have a governor. Who will be appointed? Like who will appoint the governor? Central government. Yes. SEBI, Securities and Exchange Board of India, will have a chairman. Who will appoint? Government. And then even you take this NFRA, government representation is there, na? NFRA, the boss to CA. You understood? CA Institute has done lot of overaction and they torture all the students. Curse only they are getting now in the form of NFRA. Okay. So this NFRA will have government people as nominees, nominee directors, etc. So those people, and then there are lot of government companies in which government representatives should be there as directors. We call as nominee directors. Like we have now this Tamil Nadu Paper Board Limited, like that. So in this nominee directors, all those people will be paid remuneration by the government, and this money received by them will be excluded from supply. Even this CBI is there na, Central Bureau of Investigation. So the CBI will have a director, the director will be appointed by the government, and again whatever money they receive, this is nominated post, okay, excluded from supply. Then A, actionable claims other than HC block, this is the latest amendment pa. Actionable claims other than specified actionable claims. Listen, sir, what are the specified actionable claims, sir? Previously we had lottery, betting, gambling. These three were covered under supply, all other actionable claims were excluded from supply. Please concentrate, this is one amendment. Listen, what happened is that so finance minister spoke to the council of ministers in GST council. We badly need money. Why? We are planning to abolish income tax in future. As much as the revenue that we can generate, we should generate in GST. And then we need to go to the people and tell that if we win this time, so we want the income tax to be abolished. It's a nice idea. So direct tax portion will come down to some extent, okay. So international taxation, corporate taxation only will be there. Nice idea only it is. And so they want to really, that is a mindset. Aur ek bar Modi Sarkar, this will happen, okay. So because that is their agenda, and it's going forward, nice idea only. Because why individuals and all should suffer? So let the corporates pay income tax, let the international taxation be there, etc. But GST revenues needs to be increased, and for that various suggestions were asked, and lot of people said that these gaming companies are many, like gaming companies are there, they are minting money, they are not properly paying taxes, like this Dream 11, online Rummy Circle, so lot of gaming platforms. Why they are not paying tax? Because long back one Supreme Court judgment was there that if there is a game of skill, it will not come under gambling or betting. If it is a game of chance, it will come under gambling and betting, like that one judgment was there. Now this Dream 11 thought that the Dream 11 betting and all is a game of skill, okay. No, they thought that way. So they did not pay GST. What they said is that it's a game of skill. So as it is a game of skill, so there is, it will not come under betting and gambling, because previously it was lottery, betting, gambling. So it is not coming under gambling or betting, so we don't have to pay GST, even though we say it as betting platform, but it is a skill, using mind only we can play. Actually, I will agree with this to some extent, because I also play Dream 11. I don't know anything about the IPL, okay. I don't know about the performance of any player and all. And one particular match, it was between CSK versus KKR, okay, Kolkata Knight Riders. I don't know who is playing what also. And we know few names repeatedly we will be hearing. So I selected them and all. Unfortunately, that match, so Dhoni got duck out, I think, duck out of 1 run. And whatever players I selected that match, they did not perform. I spent 2000 rupees and joined in one pool, okay. One gaming pool will be there, wherein some 100 people will join by spending 2000 rupees, and the first person will get one prize, second person will get some prize based on points they will be giving, and I did not get 1 rupee also, okay. So therefore this 2000 rupees is lost for me, means really I don't have the skill, so I did not earn the money. So in a way it is correct only. And To avoid this kind of dispute, government made a change. They are telling whether it is game of skill or game of chance, you need to pay GST. Game of skill or game of chance, it will come under gambling and you need to pay GST. And they served 40,000 crores of tax demand to Dream 11. 40,000 crores of GST demand. Okay, not 1 crore, 2 crores, 40,000 crores. And why? From 2017 till 2023, they did not pay 1 rupee GST also. So therefore, they have been charged. And like that, a number of companies. So total, they have shown some 8,50,000 crores of GST demands were served on gaming companies. 8,50,000 crores. Okay, that much of GST demand for 5 years, because we have 74 section. They invoked 74 section. 74 talks about demand and recovery. In the demand and recovery, which says that last 5 years tax payment, you can give a notice today to do the recovery. So they invoked the 74 section and they have given the orders like notices to all the people's gaming companies. And right now it is in litigation and all. So mainly they wanted to create a huge revenue, for which they want to bring in many people into this ambit. That's where they amended the definition and they are telling actionable claims other than specified actionable claims. Previously lottery betting gambling was there, they removed that, and they are telling actionable claims other than specified actionable claims are covered under supply. Sorry, excluded from supply, but specified actionable claims are covered under supply. What are those specified actionable claims? H, C block. H for horse racing, C for casinos, B for betting, lottery, online money gaming, and G for gambling. Okay. Now, what is the difference between online gaming and online money gaming? Here only online money gaming is given, but not online gaming. What is the difference? Sir, you play a game, and to play the game you spend money is online gaming. Example, so you download a game, and to play the game you may have to pay money. For example, Minecraft, not this cracked version, so genuine version, paid version. So there are a lot of mobile games and desktop games, you need to pay money to play the games, and it may be freely downloadable, but as you progress the game, you may not have sufficient weapons or sufficient currency, gems, etc. to cross the level. You need to upgrade. For example, this Sniper 3D, like that one game is there, shooting game, okay, and even PUBG also. So in these games, what will happen is that you need to upgrade the weapons. To upgrade the weapons, you need some coins, and those coins are gems and all you will not be having. So now an offer will come, 199 rupees, one AK-47 plus 200 gems will be available, like that, okay. So people like me, what they will do, 199 rupees only, no, buy, like that. So I will buy, and I will get the AK-47. For 199, really we will not get AK-47. The shooting games and all, very much important in our life. You know what? Because we can see the other person whom we hate in that, and we can shoot and we can vent out our anger. I will play those games a lot, okay. So you also try this, so that you will feel relaxed, okay. So you keep ICI or some other your principal, etc. and all, and you try, you visualize that they are there, headshot, like that. So that head will go out and the blood and all will ooze. Catharsis, in psychology it is called as catharsis. So in a way, so that you will not get BP, other problems and all. You should do this, yes, really. Mainly because otherwise you all will become psycho killers, okay. Too much suppression should not be there in your mind, you should vent it out. And therefore, these games, AK-47, whether you will get 199 rupees, really, no, na. So in this way we will get, we spend, this is online gaming. Online gaming, we spend to play that game. Online gaming, service, not at all actionable claim. So it's a pure service, it is called as OIDR service. It is called as OIDR service, please write down there. Online gaming So already I have given there, online gaming means offering a game on the internet or an electronic network and includes online gaming. Okay. So you write there, online gaming falls under OIDR services. Online gaming falls under OIDAR services. What is OIDR services? Online information database access and retrieval services. Under that category, this online gaming will be coming. Service. But online money gaming treated as what? Treated as specified actionable claims. Specified actionable claims and falls under goods. Falls under goods. That's why I asked you to write. Online money gaming will be classified as goods or services? Goods. Online money gaming is classified as goods, but online gaming is classified as services. Sir, okay, online gaming I understood. Sir, I gave examples of Minecraft, GTA Vice City, and then these are all some games which we spend money to play the game. Lot of PS games, PlayStation games, Xbox games and all, we spend money to play the game. It's gone where the days, CD and all, now nothing. Previously and all, we used to buy CD, put it in the, now nothing of that. Server, everything is through server only. Xbox, PlayStation and all, through server only we will be playing. Spend money and play. Piracy they are also controlling, you understood. So you cannot do anything with respect to that, because even if you download the cracked version, they will ask you to run it through the server. And running it through the server, they will tell it is a cracked version and it will not work. Okay. So therefore, we spend, and you don't know, people will spend 5,000 rupees, 10,000 rupees and all to play one game. Yes, you spend for video lectures, they spend for games. You understood or not? Therefore, this online gaming it is. Online money gaming. What is online money gaming? Wherein you spend the money with the intention to earn the money. You spend the money and play the game with the intention to earn the money. That is known as online money gaming. You understood? So all these betting games, lot of betting games are there. This Rummy Circle is one betting game. Then even that what is that, Dream 11 is a betting game. And you know, Ludo, like that one. Ludo also they do betting. Yes, Ludo. Who will win first? They will get the money. Everything is betting game. Lot of betting games are there. Okay, 1xbet.com, parimatch.com. A number of betting games are there. You just Google betting games. So around some 10 pages of betting games you will be getting. A number of betting games are there. Okay, and people will be playing those games, and sometimes they earn, sometimes they lose. Many times they lose only. Okay, so this online money gaming, see the wording, means online gaming. See, that is also online gaming only, in which the player pay or deposit money or money's worth, including virtual digital assets, crypto, including crypto. Need not spend rupees. They can spend even the crypto also, like Bitcoins or Ethereum coins or Doge coins or Raven coins, anything they can spend to play that, in the expectation of winning money or money's worth. Underline, in the expectation of winning money or money's worth, including virtual digital assets, in any event including game, scheme, competition or any other activity or process, whether or not its outcome or performance is based on skill or chance or both. Okay, let it be game of skill or game of chance. We will not know all those things. You spend money with the objective of earning money, winning money. So it's an online money gaming. Whether the same is permissible or otherwise under any other law. Wow. Even if it is illegal, you play, but pay tax to us. You understood or not? We need money, pa. You die also, we don't bother, okay? You do whatever you want, legal or illegal. If it is illegal, some other law will come and see. But GST law, you have to pay GST. Whether the same is permissible or otherwise, under any other law for the time being in force, then it will be called as online money gaming. Okay. So remember, online gaming is not covered under actionable claim at all. That's treated as service. But online money gaming is covered under specified actionable claim. Okay. Then because they may ask a question, which of the following is specified actionable claim, like a MCQ? In that they will confuse you with online gaming and online money gaming. Be careful, online money gaming is only specified actionable claim, but online gaming is not. Both appear same, okay, but there is a difference in that. And so tell me, what are the specified actionable claims? H, C, blog. H for C and B, betting. L, lottery. O, online money gaming. Then G, gambling. Horse racing, you know. Casinos, you know. What is casino? When you go to that place, you deposit the money, they give you chips, not potato chips. This is different chips. Color chips will be there. So using the chips you can play, and you will lose sometimes, sometimes you will win, and again whatever chips that you won, you redeem it and you will get the money. So that is called as casinos. And mainly in casinos different games are there. Mostly it will be poker games. Mostly it will be poker. And then betting, you know. Lottery also, you know. Online money gaming, just now I explained. And gambling. So what is this gambling, sir? What is this gambling? Everything. It's like, you know, today Ayodhya Ram Mandir is opening. Will issue happen or not? Like that, two people will sit and gamble on that. Okay. So that will be called as gambling. You understood? Everything and everything. Okay, India will win or Pakistan will win. So this particular person will score how many runs. So everything in their life, when there is a chance, on that chance they try to bet, that is called as gambling. Okay. So but it will not happen online and all. It will be happening offline between the parties. That is what gambling. So here all these are specified actionable claims, but sir, no one will know this now, sir. Of course no one will know, but if it is known, they will collect GST. You understood? So that's what they said, na, legal or illegal. If they come to know that there is a money involved in that, they will collect GST. So up to this we will stop. Specified actionable claims, A point, and the remaining aspects we will continue in the afternoon session, and we will meet at 2:15 pa. Okay. And for today alone 1 hour break I am giving, but going forward 45 minutes is enough. Enough, no? Because again afternoon I am giving a break, that's why. Okay.